Good evening, everybody. It's Richard Bowser here, Property Investor News. Thank you for joining us for our webinar, and delighted to be joined tonight by Anthony Howard and Piotr Rusinek of Hammered Auctions. They are auction market specialists. Some of you already, I'm sure, will know these guys. They write regularly for Property Investor News in every issue. What we're going to talk about tonight is property auctions. Okay, so this is going to be a short and sharp one from me tonight. I'm going to literally introduce these guys, some of you who know them. Before we do that, let's just 10 seconds on Property Investor News. Many of you on tonight's webinar are subscribers to Property Investor News. Thank you for your continued support, and the dodo bird is, as always, center stage at the start of my slide presentations, and this one is going to be very quick. The dodo bird is just meant to represent surviving an ever-changing environment, and that's what property market is all about. It's about adapting and surviving and making sure you're ahead of the curve and not on the wrong side of market trends. For those of you who are first timers, guests on tonight's webinar, we launched Property Investor News magazine back in April of 2002, so well over 22 years now and counting. Almost 20,000 articles we've published in that period, and we're no fluff, no BS. It's all about in-depth market analysis, trying to keep you all up to date with what's going on the strategies, the investing trends, good and bad, of course, and we don't try and overhype anything. We've got a massive website archive, as I've said. We do these regular webinars, and we've also got an increasing library of podcasts. So there we are. Webinar presentations are all recorded, and they are available for subscribers. We do make some of them open access for public, but most of them that we've done over about the last 10 years now are in our website archive for subscribers, and there's a whole range of them. I think probably this is the 5th or 6th time, maybe longer, more, that Piotr and Jay have come on and give us an auction market update. So there we are. £9.95 per month is the subscription cost. There's the website, there's a QR code, and you'll get a free magazine to kick you off and a free book on property development if you sign up via that QR code. And I will show it at the end. And that's all I'm going to say. Contact details are there. Right, I'm going to now switch over to Piotr and Jay, who are going to run through their thoughts on the auctions marketplace and what's happening. So coming over to you now, Piotr.
Brilliant. Okay, I'll be Jay's assistant.
Very humble assistant.
I will make sure the slides are working fine and all on time.
Are they coming over?
I think today's presentation is going to be mostly Jay speaking, but I will contribute as well and make sure.
Oh, there we are. There we are. So, Piotr and Jay, over to you.
Excellent. Thank you very much for having us back, Richard. It's good to be here. It always is. So Richard reached out to us and asked us if we would have a chat with everybody about the impact of the most recent elections. Now, it's a little bit premature for that because the first set of auctions will actually be happening tomorrow with the Acuitas commercial auction. So that's the first real set of auctions following the election. So we will be watching that with bated breath. And then obviously there are 2 auctions on Wednesday, one on Thursday, and so on and so forth. But basically, this is what we'll be talking about is the run up to the election, what we've seen and what we expect to change following the election. So opportunities and challenges ahead, as always. So if you aren't following us, you're absolutely crazy. You should do. We release regular content, again, following the Richard Bowser methodology. It's no fluff, it's no BS. So Property Auction Hunters is our YouTube channel, and we release videos there weekly, including shorts and some long form content with us reviewing auction properties and discussing specific strategies. And that's all obviously free and available on YouTube. So make sure you subscribe to that, because we have a competition with a friend of ours, and if we reach 1,000 followers, she's taking us for a lovely trip in Europe somewhere. So we're 820-ish followers now. We need a couple more, guys, so make sure you subscribe, like, and do all of that fun stuff. Hammered Auctions, just as an introduction, this is the company that myself and Piotr run, where we help people sell their property at auction without making any of the common mistakes that could make you lose out on tens of thousands of pounds in terms of a sale price and the costs associated with that. And the Auction Buyers Club is a exclusive small community that we run, roughly 20 people, and we help them buy property at auction and make sure that they do not lose money or make any silly mistakes, or even mistakes that aren't silly. You just don't know it's a problem until you've made the mistake. So that's an introduction to all of the things that we do, as well as trading. We trade ourselves. So we're normally buying and selling into and out of auctions. So Piotr's been doing that for 10 years. I helped run an auction company, and I've been doing the same for about 10 years as well. So on to the next slide. So
and
here's
one
the big
thing
boom.
is we are a new video every Monday, and there's another one being released on the Property Auction Hunters today, so make sure you check it out.
I literally just got the notification. It's just been released. So brilliant timing, brilliant timing. So the auction market update. We've noticed there's been a lot of market uncertainty, and that's probably more so in the last 6 to 8 weeks than there has been in the last 4 to 5 months. Whenever there is, it seems to be happening more and more these days, every time there is a political disturbance or something going on the international stage, or recently when Europe cut their base rate and there was an expectation that the UK bank was going to be doing the same thing, and it didn't. There were people that were holding back, waiting for positive news before they bought something, and then they've missed out on opportunities. So we're seeing a lot of uncertainty around monetary policy, politics. The change of government is definitely going to impact that as well, we think. But the uncertainty is very much an up-down rather than just a flat line. Normally, it's just a flat line when people are uncertain. So the reality is, if you ever see any negative news and there's an auction in 2 or 3 days' time, you're likely to pick up a bargain, because most people will be sitting on their hands. What's selling well at the moment? We sold a freehold block of flats for a client recently in Camberwell. That sold exceptionally very well. That was income producing. It was converted really very well, and it had been asset managed exceptionally by the vendor. He was selling for personal reasons. So those are doing really very well. A lot of ex-local authority and social housing stock seems to be selling quite nicely. It tends to be vacant, it tends to be dated, it tends to appeal very much to the homes under the hammer type of buyer. So if you have a property that requires a program of refurbishment, or you're just about to lose a tenant, maybe they're moving on, they're going into owned stock rather than rental stock, and you're thinking, instead of spending 30, 50, 60,000 pounds on it, you may want to just sell it, and then from the money raised from that, buy some refresh stock. Those types of assets are doing exceptionally very well at the moment. Where are the bargains?
Just to add one thing, that the properties that actually sell well are the ones that are priced for sale like appropriately. Properties that are priced kind of close to market value don't really do very well in the auctions, and it's really hard to generate competition for them. It's really important to go into the auction with pricing that's keen and that generates a lot of competition, and things actually sell very well if that competition is generated. Otherwise, properties do struggle.
So that's a very good point. Also, knowing which auctioneer to sell your property through is vitally important. You put the wrong property with an auctioneer that doesn't have the right database or the right experience with that asset, and you're not giving it the best chance of success. So if there are any questions about which auctioneer to use or how best to price, I would say speak to me, but I would recommend you speak to Piotr. That's probably the best thing to do there. Where are the bargains? We're seeing a lot of bargains in the commercial property space at the moment. I kind of touch on this later on in the talk as well. But commercial properties are being valued very differently than they were 18 months, 2 years ago. The base rate has affected the essentially the equity value, the capital value of the asset. So a property that you would expect to have bought on a 7 or 8% yield is now people are trying to pick it up at a 10% yield, and things like that. So it seems to have directly and indirectly disaffected the commercial property values. So if you have faith in a certain asset class within commercial property, whether that's industrial, light industrial, as we do, or offices as others do, then there is definitely bargains to be picked up there. Other opportunities is where you're able to pick up maybe a parcel of 2 or 3 properties together, and then title split those off, sell them separately, and sometimes the sum of the parts are worth more than the whole, and there's some great bargains to be found there. Do we expect change? The answer is yes, we do expect change. If the Labour policy of increasing the additional stamp duty rate from 2% to 3% for foreign nationals, foreign investors, then that is likely to impact certain markets within property investing. I made note in today's video, which you're going to have to watch close to the end. I made a point about a very certain residential asset class that we think will be hit by the increased stamp duty changes. Some external factors that have definitely affected property values and the way properties are marketed. Material information. You're most likely only going to be aware of material information if you're a managing agent, letting agent, auctioneer, estate agent, and so on. It is a set of guidelines that have been brought in by trading standards to make the marketing and selling of property more fair. It's designed to provide additional information than what's being provided at the moment, so that people are making more informed decisions. For those of you who are looking at auctions and thinking, I would like to buy at auction, but there's not enough information, there's not enough data, there's not enough, etc., etc. Material information slowly will be coming into the auction space, making the details that you're provided more clear and provide additional information that you otherwise would have to hunt around for. So that's going to be a big change. There's been a bit of an earthquake around that in the industry, and that's slowly rippling through. Increased legislation and change of legislation. We like buying short lease flats, or at least we try to as much as possible. And the change to the freehold and leasehold legislation has definitely made that easier. It's going to need secondary legislation to kind of show us how certain things operate, so the calculations and other things. But the removal of the 2-year waiting is a game changer, especially for auctions. So that's something to look out for. Increased landlord legislation and compliance. Compliance is a big one at the moment, especially with auctioneers. I'm not sure if anyone's tried to buy a property from an auctioneer recently, but you kind of have to go through a 7-stage security check. You know, they want to know where you were born, what your waist size is, all that kind of stuff. And some of them, this is a really important point, different auctioneers have different processes, they use different technology. So don't assume that you've bought or you've registered with one auctioneer, it'll be the same for the next auctioneer. They all do different things. And some of them are now asking for proof of funds, or for you to do a declaration for proof of funds. So just be aware of that. Cost of finance and base rate. Obviously, that hasn't changed. It hasn't gone up. It hasn't gone down. And I think one of the things that will happen before the end of the year is that there will be a 0.25 basis point drop in the Bank of England base rate. And I think that will reignite market values, especially at auction. Auction is very...
can I just add one point on this cost of finance? We've been seeing some commentary from people like auctioneers like Acutus, who are saying that this kind of expected drop in the base rate, it's kind of slowing down the property market because everyone is waiting a little bit until that base rate is dropped, and because of that, they're not willing to enter into transactions right now, because they know if they wait a little bit, they might get a better rate, and it puts a little bit of doubt into people's mind, and especially with commercial property, that's this is not the most thriving market right now, and that has impact on transaction levels.
So that's definitely something to look at there. And obviously, one of the things we mentioned about opportunities is whilst other people are waiting for things to change, it's best to take action, because there is less competition if less people are participating. Change of leadership. It's now a Labour government. So whatever your political leanings or views are, the Labour government has a very different view on landlords, properties, lettings, etc. And we are likely to see some changes there. I'm not a doom and gloom sayer, so expect change, but with change comes opportunity. So there you go. Now we're moving on to opportunities. So auction to auction trading, this is where we get excited. This is the kind of stuff that we really enjoy. Auction to auction trading, one of the chaps in our buyers club has been consistently buying properties from online auctioneers. So that's auctioneers like I Am Sold, Patterson's, Pews. I mean, SDL used to be online, but they're not anymore. But those kind of auctioneers where it's a conditional exchange. So he would be buying from that auction after the property had failed to sell 3 or 4 times. Obviously, you have to track those things. It's a proactive approach. He'll exchange contracts, and then before he completes, he'll be listing it and selling it in a traditional auction room, whether that's Savills, Allsops, whoever it may be, Auction House London, etc., etc. And that auction to auction trading, and it's basically margin trading. So whether he makes £20,000 or £50,000, he's building up to volume, and he's doing very good work. And there's quite a lot of auction traders that are doing this at the moment. So if you find an undervalued opportunity at an I Am Sold auction, others are available, but for example, and you decide to sell it into a London auctioneer, speak to Piotr about which one would be best for that asset, and then that way you'll be making a margin. So you probably, if you can time it correctly as a back-to-back, which is something that we help people do on a regular basis, then you can even subvert the stamp duty by claiming a sub-sold stamp duty tax relief. So there are ways to make it really profitable by slimming down your transactional costs and opening up opportunities there. Another one, buying from corporates and selling on better terms. Now, corporates include things like banks, LPA receivers, local authorities, housing associations. The beautiful thing with that is it's a very restricted market. Banks expect you to exchange and complete within 14 days. There are very few people that can do that unless you have a very good relationship with a bridger or you're buying cash. Now, you can buy from one of these corporates in a lesser known auctioneer. Harman Healy, for instance, they're pretty much selling only corporate stock at the moment. You can exchange, you can complete, you can then sell it into an Auction House London style auction if you like, and offer a 6 or 8 week completion. And that, by offering a longer completion, you widen up the market that's able to pay for that property. So there is a value compression from these corporates that you can exploit by completing and selling it at greater value with a traditional auctioneer. Underlet and poorly managed, these are gold mines. One of the ladies in our buyers club, the Auction Buyers Club, she's buying something off market that she's thinking of trading into auction. And this is a block of flats somewhere in the country. You pick, it's up to you. But she'll be buying them. I think there's 7 to 12 flats. I'm making it as generalized as possible so no one can say I'm giving away secrets here. It's been underlet and it's been poorly managed. So each unit needs work. Each unit needs to be uplifted in rent, and then it'll be resold. And the margin made by that uplift in rent will be an increase in capital value that will make her money. So if you're looking for underlet and poorly managed, sometimes you'll be looking through the auction catalog and think, the income on that is absolutely terrible. Always make sure you take the time to have a look and see what the actual rental value for a property in that area is. See if you can uncover some hidden opportunities there. Remember, if it looks bad, it's not just because it's bad, it may just be because it's badly managed. Commercial property, as I mentioned earlier on, massively undervalued, something that we focus on. So we're doing ourselves no favors by highlighting this to you. But there's enough commercial property for everybody, of course. So one of the things to look out for is part-let or multi-unit. The whole idea here being, can you title split the multi-unit? Can you uplift the rent on the multi-let? If it's multi-let and part vacant, can you get it fully let and then sell it with that uplift? I think Piotr wants to say something about opportunities as well. I think I caught him off there.
Yeah, so like for me, like I think the best assets are the ones that have been in the same ownership for 20, 30 years. Usually the people who hold those properties for such a long time very rarely optimize those assets in terms of the leases, in terms of the terms of the leases, the rental income. And because of that, those properties, they still sell for the same yield as they would sell if they were optimized. But because they're like under-let, they would sell for much lower amounts than they really could be worth. And then with a simple exercise of regearing the leases, maybe finding new tenants, you can increase the value of the property quite significantly. And also, I think as we progress into better times, somewhere in the future, right now it's not that great, but in say 5 years time, maybe 7 years time, those yields, the capital values of the properties will be more compressed, and basically the property prices will be much higher, especially in the commercial market. So right now the commercial market is, I would say, at the not rock bottom, but maybe close to the rock bottom. And there are some real good opportunities, especially those properties that were held in the same ownership for 20, 30 years. That's really where the opportunities are.
Excellent. Now, for everyone who's been paying attention, we've had this QR code on all of the slides this evening. We've added here the Ultimate Auction Toolkit. So make sure that you screenshot that, take a picture of that, or access that. That will give you access to the Piotr's Maximum Bid Calculator, which is genius. The Ultimate Guide to Selling, the Red Flags document, the Legal Pack templates, and our most profitable auction strategies. And I am also drafting a new document that will be added to that in the next couple of weeks as well. So it'll be something that we'll always be adding to. But you'll have to register to gain access to that. So every time there's an update, you'll be notified. Do you have any questions?
So I've just unmuted myself. Yeah. So yeah, quick summary of what's happening out there. I've got some free questions, and for those of you not familiar with GoTo, those that you are, you'll know that there's a question box. You can put your questions. If they're complex, I will then, rather than deal with that, I will open up your audio, and you can ask the question directly, providing it's not overly complex. So use the question box, guys. I've got as I say, there's a couple that got emailed into me, people who can't make tonight's talk. Landlord exodus in the resi sector, seeing much of that, portfolios, etc., more than say a year ago, 6 months ago.
So we've seen properties being offloaded, and usually the landlords, when they're trying to sell the properties that they've held for a long time, they try to basically get vacant possession first and then sell them on, because end user, like the market for tenanted properties, especially in the resi sector, is pretty bad. So there's not that many investors trying to buy properties that generate even 6-7% yields. That people are interested in closer to 10% yields, even in like good areas. The property we sold in Camberwell, landlords have like owned this property for approximately 15 years, generating 150k. The property sold for 2.35 million, so just over 7% yield, which is good, especially given like if that property was broken up into pieces, it's probably worth around 3.3, 3.4 million. So it's like, I think landlords are selling, and they are only selling tenanted stock if they really like need to sell quickly. And I believe like we've got also someone in the auction buyers club who committed to selling all of his buy-to-lets and getting into property trading, because people don't really want to deal with that compliance and the fact that the interest rates are so high and the profits are low, compliance is much higher, and those two things just basically push people out of the buy-to-let sector.
Okay, and I mean, I've got a spin on that question that was asked, the email. The HMO market, are you with the portfolios that you're seeing? I mean, are you seeing more HMOs or not, or any difference from say a year ago? I'm obviously talking residential landlord here.
So Home REIT, who went into
Yes.
partial administration, have been selling since September last year. I think it was up to September last year.
Yeah.
At least 100-ish properties, not units, properties per auction in the Allsop catalogue. You'd be seeing them up and down the country. These were HMOs essentially that they were putting together for social housing, social care uses and things like that.
Yeah.
They're putting a registered care provider in between and signing up leases on some of these things. They were saying that there was income coming in and there hadn't been any tenants in there. The properties hadn't been done up. The whole thing was a massive fracas. And I would expect that you'd still see those as well. HMOs is a very tricky marketplace. It tends to do well at auction because income sells well at auction. Auctions are an investor marketplace. It's not necessarily a retail marketplace, an owner-occupier marketplace. And in that respect, you know, HMOs are not just a popular strategy or an popular asset class, but they just seem to do really very well. Some more than others. Piotr, we've sold a couple of HMOs this year.
Yeah, we have. Those were the sort of landlords who did them up in the last 2 years, and they added quite a lot of value, and they had like various circumstances that prevented them from refinancing with on favorable rates. So basically, again, it's the cost of finance that pushed them out of that, of being a landlord, being an investor. Yeah.
Yeah, I mean, that what you just referred to is something we're looking at for an upcoming article in respect of commercial based valuations, and obviously, as we know, that almost the last 2 years now we've seen a significant shift in the base rate, and that's had a knock-on effect and valuations on higher end HMOs. I'm hearing some not so good stories around that. So yeah. Okay. So okay, we've got some questions.
In some circumstances is also the criteria, like the amount of lenders, for example, that would lend for people who live abroad or even people who live on the Isle of Wight. It's like there's certain things that prevent you from going to the mainstream lenders who have got quite okay rates. And then you have to go to those lenders that are totally non-mainstream. They're like very specialist, and they charge the same, like they charge into double digits for the HMO products or standard buy-to-let products, and those used to be quite high bridging rates. Now those are high buy-to-let rates.
Yeah, yeah. So people who were getting in on deals a few years ago, and all of a sudden they're finding that the lender that they were with hasn't got the same appetite that they have, and yeah, things have changed. Okay, there's one more question. We'll leave. Let's get some of these questions that have been coming in now. So Viz Kapoor says, I think you're talking about what you were saying about auction trading. You're saying, I would have assumed auction trading isn't legal without completing. You referred to sub-sales back-to-backs.
Yes, well, you do complete. So there are several ways that things like this can be done. You can exchange at auction. You don't have the benefit of being able to assign a contract, at least not without the vendor's consent and signing some guarantees, etc. But if you're doing a back-to-back, essentially your completion is back-to-back with your buyer's completion. So you have your top contract, which is your purchase with your initial seller. Then you have the bottom contract, which is your completion with your buyer. And those have to happen on the same day, almost instantaneously. So normally within a couple of minutes of each other.
Yeah, and so, like, people forget, and also some auctioneers will say, yeah, we can't sell a property that you're not an owner, like, of. Lots of BS. Like, basically, you will see, especially like if you read through enough special conditions, you will see in so many places special conditions that say the seller is not registered on a property yet, and they are selling as a contractual seller or contractual buyer or whatever it is. And basically what that means is someone's got a contract to purchase a property, the exchange contract, and that contract means it says that I promise to buy this property, you promise to sell this property, and this is the day that the ownership will change hands. And basically, based on that contract, because it's a promise and it's a contract and it's exchanged, then you're able to sell the property as the seller in the auction, and you just need to make sure everything is aligned, and the solicitors handling the transaction are capable. So it's definitely doable. It's more than doable. It's done every day in hundreds of transactions in the auctions. It's just about having the confidence to basically, number one, sometimes handle solicitors, because solicitors don't really know how to execute those things, and also choosing the right auction house that can support this kind of system, and they also can support or like handle the AML that is required with this process. So yeah.
If you want to learn how to do that, then reach out to us separately. This is something we do on a regular basis. It's not a property strategy. It's not a vanilla thing to do, but it is something that a lot of traders are doing now. So.
Okay, great. Viz, hope that clarified on that one. So David Crouch is saying, is it best to buy in the auction room, where obviously you're competing with everyone that's registered in that room to bid, or is it best to wait until post-sale and look at buying post-auction?
This is exactly the video that we released today on YouTube. But it's a really good question, and I think it really depends on the property, because there are some properties that they will have a lot of competition, and you might as well try to do it before the auction. However, right now, I think post-auction presents the best opportunities, because when things are slow, people do value certainty, and they do value when someone comes in, makes an offer, and that offer is exchangeable immediately, and that's really powerful thing. And there's a lot of unsold properties, a lot of withdrawn properties, and when basically people see withdrawn properties, they think, oh, maybe there was something wrong, people don't want to sell. Usually when the properties are withdrawn these days, it just means that there wasn't enough registered bidders on the day or there wasn't any registered bidders, and basically that seller is still motivated to sell. They just want someone to come and make an offer. And I think there's a lot of opportunities for making offers on withdrawn and sold unsold properties.
There's a big psychological element here, that unless you've bought something at auction, before auction, during auction, or post auction, no one really tells you about it. So pre-auction, you think, oh, I've nabbed myself a deal, but in the back of your mind, you'll be thinking, well, how do I know if I paid the right money? Maybe I paid too much. Maybe if it went to the auction, I could have won it for less than what I paid for it. Conversely, at the auction, if you win it, you're the max bidder, which means you've decided to pay more for that asset than anybody else. That's also a psychological kick up the bum. Then post auction, when you buy something, you're like, I've just paid for something that nobody else wanted. No one else saw value in this. So you really have to back yourself in all three options to believe that you're paying the right money. And that all of that comes down to having access to something like the max bid calculator, and really knowing your numbers and doing your research on the legal pack beforehand. But all three are great opportunities if you can. You just have to pick the right one for the right asset.
Great. Hope that clarifies on that one. So Arjun is asking, I mean, obviously some of the, so what he's asking, some of these things you've already said, but he's saying for a beginner, what are the key things to look for at the moment in auctions, and what agencies should I be subscribed to for upcoming auctions? Obviously, he's saying like Cotton. So first of all, Arjun,
so he's Midlands based, yeah.
Yeah, Midlands based,
Okay.
obviously. Yeah, Birmingham Cottons. Is it Aston Villa they still do there, or they were? Obviously now
They were, but I don't think they do it anymore. But so Cottons is a fairly.
Who was doing? There was one of the big Midland auctioneers who was still doing in the room, wasn't there? Not all that long ago. I'm not sure.
I think that was one Wolf.
Yeah.
But even they now moved to the online.
Yeah, online.
Yeah.
A sad passing, in my opinion, but there we go.
Yes.
It's
Well,
the
I
modern
mean,
world.
if he's Midlands based, then checking out Lovett's auctions in Coventry and Warwick. They run an in-room auction. It's an evening one. So if you miss the environment, it's a great networking opportunity. If you miss the environment, it's worth dragging your bones across halfway the country to take a look at their auction. But things to look at is we're members of Essential Information Group, so we subscribe to that. If you're looking at auctions seriously, you cannot feasibly do it without that membership. We don't get paid to say that. It's just a fact of life. You need it to be able to do it correctly. I'm a big fan of setting up a dummy email account and signing up to every single auctioneer's newsletter, because that's the only way you're going to get all of the price drops. There are some auctioneers that do not put prices on their website or EIG, and the only way you see the prices is when they send out the marketing materials via email. So it's important to have access to all of that information. Some of the things to look out for, definitely have a look at the legal pack templates document. That will tell you what should be in a legal pack, or what's ideal to be in a legal pack, and what those documents mean and why they're important. So when you look at legal packs and you see those documents aren't there, you know the question to ask. Where's this document? Are you going to provide this document before bidding? Blah, blah, blah. The red flags document in the Ultimate Auction Toolkit will also be pointing out some of the bigger, most glaring, and some of the most expensive issues you can come across at auction. So definitely take a look at that. But also subscribe to the YouTube channel, because we're always posting content about weird and wonderful things that you can come across where you make mistakes. But
I think, like, as a beginner, as well as right now, when the market is a little bit slower, and we see there are lots of traders in the auctions, and there are different types of traders. Some of them are more ethical, some of them are less ethical. And when the market is hard, they will find ways of making sure that they still make money. And that is mostly through putting some clauses into special conditions that are requiring the buyer to pay for certain things, like even for things that they never did. Like, once we had an example of a property, the trader bought this property in one auction. It was a shop with permitted development to convert into a flat, And then there was an outbuilding that was also had a permitted, like a planning permission to convert into a flat. So he bought that property, he split the things into two pieces, he put them into a different auction, into different pieces, like literally within a few days of that first auction. And he put into special conditions that the buyer will have to pay about £7,000 in planning, drawings, and all the other costs, all the things that he never even did. But he just put that into the contract, and whoever would buy this would have to pay those extra costs to the buyer. So he made like 50k just on splitting things and adding costs, and the actual difference in prices was fairly marginal, like 20k or so, but the extra cost and extra everything meant that he made like almost 50k profit. So I think looking out for those clauses, special conditions that are dodgy is important, especially as a person who's a beginner in the auctions. Another thing to really look out for, like you asked about which agency or which auctions to subscribe to. The most important thing to subscribe to is the EIG, and the EIG is so important because we always get excited about properties when we see something, and the first thing that I always do is I go into EIG and I check, has this property been in the auction? Am I getting excited for no reason at all? Because if that property has been in the auction 5 or 6 times in the last year, I know it's probably something, it's a problem that keeps coming back, and I then stop myself from doing anything else because there's literally no point. And I think as a beginner, it's important to find a reason to not do something and then move away. And that's the key thing.
Okay, guys. So yeah, Essential Information Group in Property Investor News regularly, and David Sanderman, who's the lead guy. David known him for many years. He'll be joining us in the autumn for another auctions update. I'm assuming Piotr and Jay will be able to join us for that later on in the year. But yeah, Arjun, you asked that question, and EIG definitely is something you need to be looking at, and obviously looking at the legal pack ongoing. Always look at the legal pack. When we did auctions in the room, it staggered me the number of people that registered to bid and hadn't even looked at the legal pack, because they asked us at the front desk for the legal pack when they walked through the door of the auction rooms. And those events that we were attending at that time were like Savills Auction, Auction House London auctions, much higher out values, obviously, and people hadn't even looked at the legal pack. Staggering, the madness of crowds, and also the devil's in the detail. As I keep saying, you just referred to it, Piotr. Look at the detail. It's all about the detail. Yeah. Okay. So, question here about social housing, as it's been referred to with the home REIT. Is social housing a good opportunity right now for blocks and flats? What are your thoughts on that?
Well, if you can fund them, then yeah, they're great. But you have such reluctance for the majority of the banks in the UK about funding these projects, because if you stop paying, or the registered proprietor stop paying, or the lease stop, whatever it is, they have a huge PR issue of kicking out vulnerable people, whether it's battered women or people who are fleeing other countries for social persecution, whether it's disabled children, whatever it may be. No one wants to get their hands dirty on that. So if you're the type of person that wants to invest in something, then refinance to draw as much capital out as possible to do the next deal. Social housing may not be the easiest way to do that. Social housing comes in so many different shapes and flavors. You've got ones where there's like a warden on site that's looking after heavily disabled people, and the rent per unit can be £3,000 or £4,000 a week, let alone a month. And then you go all the way down to you can get LHA plus or whatever it is. So it's shouldn't really umbrella that term too much. It's the same thing with like HMOs. There's different types. But is it a good thing to do? If you want to be a social impact investor and you're doing it because you care about the type of people that you want to house, whether it's homeless people or battered women, refuge people, or whether it's heavily disabled children or refugees, whatever it may be. If you care about those people and you want to provide them good quality housing while they're here in the UK, then do it. But if you're doing it just because you think you can make more money than if you were doing an HMO, then it probably isn't the thing that you should be doing.
Okay, great. So this is from Chris, this question, Chris Gordon. Good evening, Chris. He's saying, do you find many mixed use properties are offering scope for profitable title splitting, in particularly where there's resale on the ground floor, resi on the uppers, and are there any particular pitfalls to look out for with that type of property? So mixed use.
I think with mixed use properties, it's doing a title splitting on them is quite difficult because I mean, difficult from a perspective of extracting like the highest value for those parts, because when you have a flat above a shop, it's quite often difficult to finance that flat. So basically, it would be required most of the time to sell it to cash buyers, and cash buyers will not pay the same as the people who can live in the property, get a mortgage on it, and basically live there themselves. So when those mixed-use properties normally are best held as one asset, unless you can convert their shop into a flat and create basically a fully residential unit. That really makes sense. But otherwise, splitting them doesn't really make much financial sense. On paper, it does. However, in practice, to get those values is very difficult. So we would always suggest to look at the asset as an income producing thing, and then see what it might sell for as a fully income producing thing. Maybe optimizing income on it, maybe adding a flat at the back of the shop, and then creating shop, flat, and another flat on top is the way to go. But title splitting, probably difficult.
Yeah, so some of the pitfalls you need to take into consideration is Piotr's absolutely correct. If you keep it as one whole unit, you'll get commercial term finance rather than splitting it up. But the real trick here is the question you're asking yourself is, if there is a retail on the ground floor and ancillary or offices above, is it valuable to convert the offices above or the ancillary above into residential? In some areas it is, but Piotr's right, you shouldn't really be thinking about title splitting that. You have to change fire regulations and soundproofing and all this other kind of rubbish. But the other thing that you have to take into consideration is, what is the current occupier of the shop below? If it's a fish and chip shop or a laundrette or a hairdresser or an off license,
so the nail polish.
Your finance options are bare and expensive, and you won't be able to get the right loan to value. You won't be able to get the right valuation metric anyway. And it gets worse because it's not just the property that's below it, it's the one either side of it. So a valuer could turn around and say, oh, well, underneath you is an accountant's office, but next door is you know, a massage parlor, and on the other side isn't. Yeah, anywhere where they think there's flammable liquids or anything can go wrong, chances are it's not going to happen. But mortgage companies don't like it.
We get also people in the Auction Buyers Club who had a property that was just a standard shop, like not even off license, just a normal shop open from like 9 to 5, and to both sides of the property there were also like really decent businesses, accountants, and kind of office type things. But 2 doors down there was a Chinese shop, and because of that Chinese shop 2 doors down, the surveyors were saying, no, it's too much of a fire risk for the whole thing, and they were getting zero valuation on their own block, which was pretty extreme. Even though they had like I think they even had a certificate from the fire station saying that there's no fire risk from this, and it's still not good. Basically, sometimes with commercial property, you need to look at it as a whole rather than trying to split them.
Yeah.
Okay. So the question that I had email on was about pricing trends. So the sort of sub 250 market, and then the higher value stuff, 750 plus. Are you seeing more appetite in the lower bracket, or less appetite in the upper bracket, or is that depending on regional trends? Obviously, average London property resi, I suppose these days would be 600 or whatever it is, providing it's a fair win.
I'd expect it to change somewhat. I mean, regionality will change massively on that. If it's resi that's let, that will also impact the price that's paid for it. But with Labour intending on changing the stamp duty free levy, that will affect things as well. I remember back in the day where 250 was the stamp duty, up to 250 was the stamp duty free. And when we were trading back then, we were buying at a certain price point because we knew that any buyer at auction was going to stop bidding at like 249 or 248 or whatever, because they didn't want to hit the stamp duty levy.
Yeah, quite.
Obviously, that changed with for investors having the additional stamp duty levy for if you own multiple properties. So that's changed, but I would still expect to see that some people psychologically will be measuring their purchase pricing to reduce frictional costs in some instances, but there isn't really I think Essential Information Group maybe 3 weeks ago released 4 weeks ago, maybe 3 or 4 weeks ago, they released one of their property auction insights. They do a quarterly report. It's amazing. It's free. So if you go onto their website, sign up to their newsletter because it's invaluable, and they send you out this quarterly report as well.
Yeah, all the data.
And it shows, all of the data, because they collect the data everywhere, have been for 30 plus years. And what it shows is that there is no correlation to price on these things. There are some properties that you can list for £250,000 and it could sell for £400,000. There are properties you can list for £400,000 that will sell for £400,000. There's no rhyme or reason because the market is always moving. It's not like with the estate agency, if you see number 26 Acacia Avenue being sold for £350,000 in March, the chances are number 24 Acacia Avenue with the same floor plate will sell for £340,000 in September. There's a chance that's likely to happen. That doesn't apply to auctions. It just doesn't. So you need to really work on your numbers and know what you're doing before you bid.
Very good. Yeah, that's absolutely. Okay, we're coming towards the end on this one, guys. So put your questions in the box if you've got any more bees in your bonnet that you want to air to our presenters tonight, Jay and Piotr. You mentioned obviously commercial. Niches in commercial, you mentioned a few. I think you said you were big fans of logistics. Anything else that people maybe need to be thinking about? Obviously, there's been a big boom in office to resi conversions, commercial conversion, shops and tops. Anything else that maybe people need to think about?
I think when it comes to office investments, there could be some opportunities if people have really good plan B and plan C for things. There's been a lot of empty office buildings that are kind of this type of headquarter type buildings where the whole company would take the whole building and it would be the headquarters. But a lot of them has been empty, and some of them, because they are based on sort of office estates, industrial estates, it's not that easy to make them into attractive residential conversions. So I think there is a lot of that goes unsold. In terms of attractive auction properties or attractive commercial properties, definitely sort of like light industrial manufacturing. Those are performing well if they are sort of good quality in good locations with good covenants. And good covenants here we mean sort of stable businesses, not necessarily A-rated kind of covenants.
You don't need to buy an Amazon warehouse for it to make sense. Is essentially what we're saying.
That's exactly that. So that's fairly popular. What else is popular?
I think you listed pretty much all of the popular ones, Richard. You kind of done us over a little bit. Those are the ones that are
Sorry, guys.
But you know what? The reality, everyone's talking about like the death of the high street, right? And the chances are probably not the high street, but secondary and tertiary parades, I think, are at risk. And a lot of businesses are going online, and they need fulfillment centers. They need these light industrial warehouses where they can store their stock and then dispatch it.
Yeah, last mile stuff, and
and that stuff has been equally as affected on commercial base rate terms as every other bit of commercial stock. So there is a chance to start picking up stuff really on the cheap, even if it was just 10% yields today, and in 5 years' time you sold them on 6% yields, which is completely viable. That was what was happening 2 years ago. These things were selling at 5.5 to 6% yields. So if you're buying them at 10, your arbitrage is 10 to 6. That's a 4% gain. That's huge on a capital basis. So yeah, we definitely see a massive weakness in the market there. And the beauty of it is it's a business-to-business relationship. If you're dealing with commercial tenants, there is no having to get the locks changed because they've lost their keys on a Saturday night piss up, or there's a leaky tap, or the next door neighbor that makes noises and all that. You don't have to deal with any of that stuff. It's the commercial tenant that has to handle the environment that while they're in there on an FRI lease. So there's a lot to be said for that on operational cost. If you've got a commercial income, that net income is so close to the gross income that it's almost negligible. Whereas the gross income that you get on an HMO, for instance, once you net down the voids, the bills, you net it down, all of a sudden it doesn't sound as great as it looks on paper. Commercial property is far less affected by that. You get yourself some landlord insurance on the building, and the tenant has to deal with everything else. It's beautiful.
Okay. So Andy's asking, how do you see the market in the next 3 months with the change of government and policies in terms of 1.5 million new homes plan in the next 5 years, and also, and this is quite a big one, the relaxation of planning, the grey belt. I mean, we covered this in a recent webinar with Paul Higgs, and that I'll be with them tomorrow.
I think regarding that, a lot will become much more clear by at the end of July, because like Labour has committed to release some of the policies, some of the plans by the end of July. So I think within the next 3 weeks, we will know a little bit more. Right now, it's really difficult to speculate because Labour policies can be a little bit contradicting. On one hand, they want to build 1.5 million homes, and on the other hand, they want to increase sustainability and how things like are being built and how eco they are. And I think some of those things are kind of don't go hand in hand, and one will slow the other. And we'll see how they will propose to resolve those contradictions. Maybe there is some sort of genius way of doing that, but again, devil's in the details.
Yeah, absolutely. Okay, as I say, we're coming towards the end now. Most thanks. Thank you very much. Now, hang on, what's this one? Andy Long says, great. By the way, Piotr, thanks very much. Had some great training with you. So there we are. We've got a testimonial from someone who's on tonight, saying how much he appreciated the training that Piotr and Jay have given previously. That wasn't. I'm sure the check will be in the post to Andy. Buzz, you're asking, how do we get in touch? Well, if you look at your screen, you'll see a QR code there, and I'm assuming that will take you through to.
So that takes people to the mailing list, and tomorrow you will receive an email with the ultimate auction checklist and basically you will then receive emails from us in the future until you unsubscribe, but you will be able to basically get in touch with us through that and through social media. We're both on LinkedIn, fairly active there. So yeah, multiple ways of finding us. We are very difficult to not find.
Avoid. Okay, so final questions before we close off tonight. Anybody? Put it in the question box. I always say that we'll finish before 9 o'clock, and really want to change that. I respect the fact that people's evenings are valuable, and whilst we all love property and investing, there's respect people's. Yeah, so some of you now are saying thank you. Yeah, thanks for all the explanations. Yeah, okay, so let me just grab back, if I can, from if I can find a tool for doing that. Have I done that? Yeah, and where are we? That's it. Seems to be having a bit of problem with the tech. Okay, well, we're sending you out an email tomorrow, and there'll be a QR code in that for signing up to Property Investor News if you're interested in becoming a magazine subscriber. And as I said, you'll get access to all of these webinars going back over the last 10 years on specialist subjects such as auctions, such as planning, such as development. And of course, we will cover all these topics in every issue of the magazine as well. And as I've said earlier, both Piotr and Jay write for us with a monthly column on auctions and auctions trading. So there we are. I think that's enough for tonight. You're clearly all saying thank you and a great session. So by the sounds of it, we've not wasted your Monday evening, guys. Piotr, Jay, and of course all the attendees who have been supportive tonight. So anything else you want to add, Jay, Piotr, before we close off?
No, I think that's pretty much it. Yeah.
Right. So you can hit the beach, Piotr, with a late swim, or he's got a good tan there. I've got a tennis tan. Your tan is, I think, more to do with the climate out there, isn't it?
Yeah. I mean, to be honest, I play paddle tennis, but
good lad.
That's my recent addiction.
Oh, yeah, I did pedal last year in Spain, but I was staying in an apartment complex about 100 meters away from the club, and it drove me mad in the evening, the sound, because it was just echoing all around. So yeah, normal tennis is a lot less noise disturbance. Yeah.
Nice
okay, well, listen, great to have you on board, and thank you everyone for tonight. There we are. Thank you, and good night.
Good night.